Yeah. Give it another minute for this to join.
And so we'll make a little start, I think, guys. So firstly, thank you all for dialing in this morning to this webinar, which hopefully should be a useful half an hour to 45 minutes for you guys around the later life space. Just to make you all aware, we are recording today, and if anyone's got a dart out before we finish, the recording will be made available at a later date for you as well by the email that come out after. So again, yeah, thanks for all dialing in. Quick introductions before we get going, and obviously and apologies, the invite obviously came out with Hem and Abs doing the meeting today. Unfortunately, Abs is unavailable, so you've got the lovely pleasure of myself. So I'm Stuart, guys. I am the field-based BDM covering all of Wales, the Midlands and the Southwest. Joining me today is my colleague Hema. Hems is our North of England and Scotland BDM, so she does cover half of the country, God love her, on her own. And we've also got the lovely James Enos, our National Account Manager, joining us as well today. So the format, guys, what we're going to run through is myself and Hems will do a little bit of a presentation for you, and then we've got James join. We'll dart back on at the end. Just have a little bit of a Q&A session. So if you've got any questions as we're going through, any burning issues you want to discuss with us at all, please just drop a message in the chat, and we'll pick them up as we go along. Anything we can't answer here, if there's any underwriting questions you have that we can't actually maybe answer, we'll take them away and we'll come back as quick as we can. Can I just ask that everyone just stays on mute and as the cameras turn off as we're going through the presentation today. All right. So why are we actually running this presentation or running the session for you? I think majority of you know Hodge as a later life lender, and that's what we specialize in. We've been going now since 1960 in this space, and we're really passionate about it. But we want to try and change the image potentially of what the later life space looks like. Just going to bring the presentation up for you a moment while we're doing this. 2 secs, sorry for this. So yeah, so the changing faces of the 50 over 50s market. So why are we actually running this session? We could just simply say it is for you to, or for us to tell you all about Hodge and how we can help your clients with our criteria and our policies. And to be fair, we'd be silly if we didn't do that. And we will cover that off later on in the presentation to take you through how some hints and tips about where we can help and support you guys with those clients and helping them and helping you to get those yeses rather than the no's you may get from other bigger lenders. But so the main part of today is to really talk about the changing faces of that over 50s market, as the caption on the screen shows you there, and why the demand for this type of lending is continually growing. And also there, obviously, to give you some tools, some hints and tips around to have those conversations with clients who will fall now into this bracket more and more. Maybe it's for you guys to change tact, and maybe the type of customer you're actually writing business for at the moment is changing. If you're a first-time buyer broker historically, and that's all you've done, maybe that market's slowed down a little bit. Maybe you're looking to move into a different space. Or maybe you're just after an insight into it, maybe just an insight into it because it's not a market you've specialised in before or actually written any business in before. Because the later life space, the over 50s market, was always seen as this specialised space. But hopefully, as me and Hema go through the presentation today, you'll actually realise that this type of lending now is actually not so much specialist anymore. It is becoming far more of the norm. And on that, I'm going to hand over to the lovely Hem now. Hem will take you through what we'll be covering off in the next 20 or so minutes. So Hem, over to you.
Thanks, Stu. So in terms of the session, we'll be touching on the changing demographics and the growing need for financial solutions for clients over 50, and how critical it is for you as advisors to not only know, but to understand your target audience. along with other reasons as to say yes, or how Hodge can help you say yes. The demographic of the over 50s is constantly evolving, with emerging and with categories emerging over time. And understanding your customer with distinctive age groups is vital. The later life market is forever, as I said, growing, and in order for brokers like yourself to develop your business and target audience and understand future opportunities. So again, it's about later life is about lending both into and beyond retirement. And you can often find yourselves dealing with later life market, albeit imperative that you give your clients a holistic overview of the products that are out there. So we want to help you get to understand your customers a lot more. But with limited time today, we're able to focus on two specific segments of the market, the Queen Ages and the Sandwich Generation, and we'll aim to bring these cohorts to life. So without further ado, before we start, I'm just going to do a quick little puzzle for everyone to participate in. So can everybody put their answers in the chat functionality, but how many F's can you see in this statement? I'll give you all a couple of seconds to put your answers in.
Yeah, countdown time a bit, didn't we?
I know it is, yeah. Excellent. Some good numbers coming through there. Perfect. So the actual answer is, thank you everybody for putting the answers in. The actual answer is there's 6. So what I wanted to demonstrate is that it's not always about what you see. It's about looking further and understanding the client in depth, and not just what's on the face of a client. There's a lot more when you probe deeper. And probing deeper is what we do. So I'm going to hand over to Stu to highlight some research that we did at Hodge. Over to you, Stu.
Thanks, Em. So yeah, guys, that was just a little bit of fun there, but hopefully it just shows that it isn't just about looking on the surface. It's about looking a little bit deeper, because when Hem's put in front of me, I got 3 because I wasn't looking at the obs, the little words on there. And I suppose that comes back to you guys. So when you've got those clients in front of you, are you looking between the lines? Are you looking for those little segments potentially that will lead you down a different path, potentially what that client wants to do? So it's all about just getting that fuller picture of the circumstances and understanding what it is that client actually needs. And as Hems mentioned there, we do a lot of research at Hodge because we're constantly trying to improve our services, improve our products, and to bring more things to market for you guys to be able to present to your clients. Obviously to grow our business, but to help you guys grow your business as well, because that's the business we're all in, is helping each other, I suppose. But the stats on the screen there will show that there's probably more that we as a lender, or we as an industry, really need to do when it comes to later life lending. Because 70% of you guys are telling us you need more education in the later life space. And there's a staggering 91% of customers saying that they need more education in the later life space. It was never more evident to me about that as in a recent event I attended, and we had a panel. I was looking at to be part of a panel debate, and the host asked the room what they felt, room of mortgage brokers, what they felt later life lending meant, and nearly everyone said equity release or lifetime mortgages, or people in their late 60s. Now, I'm not saying equity release, later life, lifetime mortgages play a part. They play a big part, and for the right customer in the right circumstances, they're ideal products. But the reality is, a later life lending now is actually anyone age 50 and above. And there's far more options out there now than just the equity releases of the world. There's far more affordability based products out there, which may be far more suitable to people than just going down that equity release route. And I've kept banging on for the last 3 years since I've been at Hodge, and I'll continue to do so, that we do live in a massively aging population in the UK. Retirement for everyone is no longer 65. We've seen a massive increase in people now over the age of 50 working longer. 2003, we had 4 million people in the UK working age 50 and above, whereas today it's actually 11 million people age 50 and above are now working, and they're not just working until 65, they work until 70, 75, 80 potentially, and not just because they want to, a lot through necessity now. And as I said, the need to work longer is increasing, and it just shows there that 60% of you guys agreeing on that profile of late life customer is changing, and that's right, it is, because people are now, as I mentioned, we keep mentioning, working that longer into what is essentially what people would class as retirement now. People are fitter and healthier than they were 30 odd years ago. The face of a 65-year-old now is totally different to what he was 30 years ago. If there's any of my brokers on here today, you've probably heard me talking over the last couple of years about the difference between my dad at 65, my granddad at 65, and the changing faces of that one. Pension pots have been stretched now more than ever before, and again now people are choosing to work that little bit longer because they've got to plug that gap, because they thought when they got to 65 potentially it would be the time to put the slippers on and start smoking the pipe, when actually that has now changed dramatically, and it's continued to change as we go along. So later life mortgages, late life lending has been in the press a lot recently. Hems now is going to take you through a couple of press releases that have been released and talk to you about the changing faces and the changing viewpoint of later life within the press.
Thanks, Stu. So recent press releases, they actually highlight there's still a big focus on the maturing interest-only mortgages. These were the ones that clients took out in the 90s and the noughties. And if you're not seeing these types of clients, I assure you, you will start seeing them, because they are due to reach its peak by 2032. They say there's around 30,000 maturing each year, and a lot of these will have cashed in their endowments with no repayment vehicles. More consumers are retiring later in life due to cost of living and outstanding mortgages and unsecured debt, as not many have a healthy pension pot, along with consumers in their 40s and 50s getting on the housing ladder, excuse me, much later in life and than the parents or grandparents. But this is due to various reasons, and it means that they'll be working longer, as Stu, excuse me, as Stu has already alluded to. The silver splitter demographic still very prevalent, as higher divorce rates in clients over 60s and over, which means that they'll be starting off all over again in the golden and the mature years. And data supplied by the FCA to the Bank of England that showed that more than 1 million people took out new mortgages in the last 3 years that would not be paid off by the time they reach pension age. It revealed that people under 40 made up the fastest growing group of people taking mortgages into retirement. And I, for one, am an example of that. And it also shows that many of these borrowers were first-time buyers. So again, lending into retirement, it's moving more from a niche to a norm. There's a growing need for consumers to plan up to, which then takes them into retirement. And at Hodge, we're on a mission to change the way advisors like yourself and the consumers view the market and remove the stigma of age, and basing recommendations on customers' retirement plans regardless of age. See, the articles are interesting and they're also very relevant. And as I said, here at Hodge, we carry out research on a regular basis to make sure our products continue to serve the types of clients that they're intended for. And from recent research we've carried out, it's clear, as Stu has already highlighted, that many standard mortgage brokers don't fully understand the solutions that are available to borrowers who have the need for mortgage finance into later life. And consumers are not aware of what is actually available. However, something has to change. And education is the reason why we're here today. It's a start, but there is a lot more work to be done. So, as we said at the beginning, we're going to highlight 2 cohorts. And one of the big ones is the queenagers. And as many of you have probably not even heard of a queenager, but it's a new kind of midlife woman aged between 45 and 60. And again, I fall into this cohort, and many of the advisors that are on the call probably do as well. They're a pioneering generation. They've worked all the way through since higher education, and a third of these women they don't have children, but 2/3 do. and they've returned to work after raising their family. These women don't want their mothers' midlives as times have changed, and they want a different outlook and a different way of life, especially at this age. And they don't want to be defined by a menopause label. They don't want to be invisible anymore. So again, what women want to do is they want to start looking forward to being 50 as a time of opportunity, enjoying life, and they don't want to be restricted by the financial situation. They actually account for 8.5 million women that are interested in finance, politics, health, and they're more educated and purpose-driven than ever. In 2019, a census that was done, women over 80 out-earned women under 40 for the first time ever. These women were called queenagers. They are financially solvent. The fact that they make 95% of household spending decisions and they are overlooked and underrepresented. So queenagers don't want to be invisible anymore. As I said, unlike previous generations, they want women to look forward to being 50 as an age of opportunity. So the queenager is definitely an important cohort to be aware of. And as I said, our mission as a lender is to remove stigma of age. Retirement is key, not age. Retirement age increase is always up for discussion. Pension gap for women. We'll see the landscape changing here as a queenager comes through. The queenager is definitely an important cohort and is something to be aware of as a sandwich generation come through, which Stu will go through. So over to you, Stu.
Thanks, Em. So guys, when we were putting this presentation together, I say this quite often that BDMs, we do love a stat, and Hems gave me one about pension pots, and 25% of women didn't realise their pension pots in stocks and shares compared to 45% of men. That's the stat, Hems, and that's the correct one.
According to Hargreave Lansdowne, yes, Stu.
Yeah. So there's still a hell of a lot of education needs to be done around this. And I think it's great that lenders, like I said, like Hodge, are actually pushing now the women's side of it with the queenager. The financial industry is still very male orientated or dominant, sorry. And I'm quite passionate about the fact that I think we still need to see a lot more women in this area. No, I'm a dad. I've got two young daughters, and I'd love them to have the same opportunities that I had to make my way through this type of industry. And I still think we are getting much better. You know, at Hodge, half our BDM team, a female, Emma, our sales director, female, Chrissy, MD retail, female. We are getting better at it, but I still think there's a fair bit more that we need to be done around that. That's me on my high horse around that, guys. I'll get back to the presentation now instead for you. So yeah, the sandwich generation. What is it, or who are they, or what does it actually stand for? So this phrase was first coined back in 1981. And it means people who have dual responsibilities for caring for either sick, disabled, or simply elderly relatives, as well as their own children. And it's estimated there's 1.3 million people in the UK now who can be classed as this sector, the sandwich generation, or just over 3% of the overall UK population. And 71% of that bracket actually fall between the ages of 40 to 60. So are either in or just about to fall into the later life market. And a perfect example of a person in the sandwich generation is our very own business development director, Emma Graham. I spoke to Grayo before this, and she's quite happy to share this story with you guys. So a lot of you on the call might know Em or spoken to Em previously at events, or will know her socially. Aside from being a leader and a massive voice in the late life space, someone who speaks so passionately about the market and drives us as a sales team, Em is also a single mum to a young daughter, but she's also a primary carer for her dad. And the challenges that this sector of the market comes from the rising financial pressures of having to care, or the financial pressure of both ends, the two dependent generations, balancing full-time work. And in Em's case, she's in a highly stressful, fast-moving job. She's also got to look after people like me and Hema 5 days a week as well. On top of that, with family care as well. And this can have a real negative impact on a person's mental health. You know, mental health is very prominent in society nowadays, and it can really alter people's personal goals. So there is a need for people in this sector of the market, and probably the market as a generalization, to be able to talk to people about their finances, the need to be able to save for retirement, and the need to know that there are options out there and the right people to be talking to with the right knowledge. So if there's anyone that calls an ER advisor and doesn't write the norm, so that your standard resi business, maybe if you're not already, align yourself up with someone who writes that residential side of it. Or if you're just a normal resi broker, align yourself maybe with an ER advisor for these types of customers who you may not see on a regular basis. But as we keep speaking about, an aging population is going to mean you're going to start to see more and more people now who are falling over the age of 50, over the age of 60 potentially, and have that need for a mortgage into later life, because the demand is definitely there. And we've already, again, I keep banging on about the fact that we're an aging population, a third of the UK being 55 and above. And Experian tells us that there is approximately £100 billion worth of open mortgage balances for clients over the age of 55. I know a lot of those people will have plans in place, they'll have end of terms, they'll have term mortgages coming to an end. But a lot of those people will come towards the end of a natural term and will need a home for their mortgage and will need to be able to discuss those circumstances with the appropriately qualified and people with the knowledge. And that's where you guys come in and play a massive part in helping and educating the consumer, basically. And with the aging population comes that need, as I keep mentioning, to work longer past that assumed retirement age of 65. Now, cost of living, regardless of what we're told, is still biting for most people, let's be perfectly honest. People still need more money to maintain standards of living as their kids get older and potentially start to have families of their own. Parents are still supplying deposit for their kids or even their grandkids potentially to buy their homes, but we're still seeing a lot of people now in their 50s and 60s actually supplying mortgages for their elderly relatives. So it's not so much the bank of mum and dad anymore, it's more the bank of family is what we've coined it as going forward, and that is still the 9th biggest lender in the UK today. There is an unprecedented level of unsecured debt in the UK. By 2029, it's going to be estimated over £500 billion worth of debt. More and more people buying later on in life and moving that debt further down the line. And people are now taking steps to ensure that they are comfortable when they move into retirement or move towards retirement and secure in that later parts of life with a consolidation potentially, or just looking to tidy things up so they can maintain a standard of living. And as Hems mentioned earlier, there is that sad trend of people actually divorcing more now in the later life, that silver splitter generation. And you could well have someone in their 60s, or we even have people in their 70s now who as maybe an effect of COVID coming out the other side have decided after 30, 40, even 50 years together that they want to make a fresh start. And that's difficult enough at any age. But if you're in your early or late 60s to early 70s, trying to make a fresh start then is nigh on impossible. But you may have one person needed to, or maybe even two people needing to buy that forever home now at that stage in life, when we need more lenders to step up and support in that state that the customer could be in. There's many different reasons why people may want the mortgage in later life. Again, silver splitters, they could be a remortgage, it could be a moving close to the family, but you need a lender out there who's going to understand that situation, appreciate the problem, but be able to say yes to you when they need help and support and guidance on it. And Hems, I was going to take you through some of the main reasons why we at Hodge can actually say yes to these types of customers.
Perfect. So a little bit more in depth as to how we can say yes. But first and foremost, we're referring to our retirement interest only mortgage and our 50+ product. And the difference between the two is a RIO is a lifetime term and it's paid when the client passes away or goes into long-term care. And if it's a joint application, it's a surviving partner passing away and going into care. And then a 50+ product is a term product. So taking clients anything from 5 up to a 40-year term. However, with our affordability, it's manual underwriting, affordability. Again, for ourselves, one thing I'd like to highlight is if it makes sense to you and it makes sense to our underwriters, then please send it through, because sometimes it's not, the case isn't always black and white. I can assure you the amount of queries that come through, the cases are not black and white. They're all complex cases now. So a lot of the brokers that I deal with, they just want to run a case past me just to double check before they do send a DIP or an application in. But going back to the affordability, our income multiples. So for the interest only, we can go up to 5 times. And then for repayment, we can go up to 5.5 times. And the interest only product is a true interest only product because it's stressed on the interest only basis. And if there's a joint application for these clients, we can always consider clients who are under one applicant that's under 50 as well. They don't both need to be over 50. In relation to our income, we can look at transferable income from spouses and future income, pensions, investments, life insurance policies. So we're always looking to enhance our criteria, our affordability. So again, these are some enhancements that we've recently made. And we can also look at 90% land and property income. So we don't have a minimum income. It's all based on affordability. And as I mentioned earlier, it is real life underwriting. We'll look at multiple reasons for capital raising, first-time buyers in this demographic, which we've already touched on. And obviously, you know, it's definitely a growing area, but some may have rented all their life and then they've come into inheritance and they may be going through a life experience, like a divorce is looming in the background. So they're looking to start off all over again. Ourselves at Hodge, not only do we have an underwriting team, but we also have a property team. So again, any quirky properties you may want us to have a look at before you put that application through, do send it through. But we are able to do day one remortgage, where your client can pay back a bridge as long as it's not for business needs. And if someone's moved close to family and took out a bridge to buy another property, it can be used for that purpose. We can also look at properties adjacent to commercial, as long as it's not a big commercial. But again, please refer to myself or Stu or your local BDM, and we can check this with the property team as well. And our minimum equity region. So again, it varies. There's so many other lenders out there, and I appreciate we don't expect to remember this, but just pick up the phone and give us a call. But I did want to highlight this. So again, for our 50 plus, it's really straightforward. So Scotland, excluding Edinburgh and Dundee and the North East, it is 100,000. And for Northwest, Yorkshire, Humberside and Wales, it's 120. London is 250 and the rest of the UK, it's 150. But as I said, I don't expect to remember this. It's all on our website as well, and the slides will be shared with you. So moving on to our other USP, which is kind of underrated, to be fair, is our early repayment promise. And those equity release advisors who are on the call have recognised a few names. You'll know this as the downsizing protection. However, I do love screaming and shouting about this because it's unique to ourselves at Hodge as a resi lender. So something, as I said, we had many years ago in our equity release days, but we incorporated it in our Rio and our 50 plus products. So really straightforward. The early repayment promise basically means that your client's in a 5-year fix, for example, and their circumstances change and they're selling that property and repaying the loan and moving out. We would allow them to we would waive, all ERCs, even though they are in their fixed period. So again, it's just something to highlight again that is available with ourselves. So as we bring a session to the close, there are a couple of things that I wanted to pull out. Firstly, knowing your customer has never been as critical, especially in light of consumer duty and the changing face of the later life market that we've already touched on. And secondly, don't hesitate to reach out to any of us with questions around the underserved customers looking to lend up to and into retirement. Again, it's our area of expertise. We have been around since 1965. And I say we, I don't mean Stu, James and I, Hodge as a whole, been around since 1965. Not quite. We've been long champions of the underserved market and always looking at ways to innovate. But one thing I will leave with you is to remember complexity always brings opportunity. And we've got some fantastic data sources at Hodge. So if there's any brokers here today who'd like some support with lead generation in terms of helping you identify opportunities in a regional basis, then reach out to either Stu or myself or your local BDM, and we can put some sessions in for you. And we've got a great team that will be able to help you. But your queenagers and your sandwich generations in due course do actually need your support. So before we head over to our questions and answers session, I just wanted to highlight, Stu, have you got that slide that you can just share in relation to our event? So ourselves at Hodge and a couple of other lenders out there in the resi space and in the equitability space have joined forces together, and we've started a later life collaboration, and we started that in Glasgow. That was last week. And that went really well. So we've got, it's the last slide, perfect, thank you. So again, that's gone really well. And then we've got some upcoming ones that we're starting next week, our tour, I like to call it a tour. So we've got Leeds on Tuesday, next Tuesday. And then we've got Coventry on Wednesday and Swindon on Thursday. So for those of you who haven't registered, please do come and join us. It's more of a thought leadership morning as opposed to our criteria dumping or other lenders' criteria dumping. And we also have a guest speaker, John Dunkley, who's fantastic. So if anybody wants to join, please do drop us a message. We can get you registered. We can send you a link. But we are going to now move over to our questions and answers session. I just wanted to take that opportunity really to kind of highlight that we've got that event coming up. So we're going to open the floor now. If anybody's got any questions, I know we said we'd put it in the chat functionality, but again, we're ready to take any questions because we've still got a bit of time. But I'm going to start this off and I'm going to ask James. So James, what do you think the main challenges currently facing in the later life market?
Morning all, morning Stu. Some great content there just before I get into the nitty-gritty on the question there. And it is a great question. I think there's many challenges across our market and this particular part of the sector. But I think I always look at this, and I think we do this fantastically well as a industry and a sector, which we look at these challenges and we say, okay, lots of challenges, but there's a huge need, and what are the opportunities within that space? So flipping that slightly on its head, where this is a growing market, okay, but we really need to, as a key lender within the space and as an industry as a whole, embrace the direction of travel from an education point of view. You've talked about it. This is a key part of that we're running through today in today's session, that if the broker community and the lenders don't educate themselves, we can't pass that on then to the consumer. And I think the consumer is definitely in the dark in a lot of cases to what's available to them. Like, I think we've all got our own personal anecdotes, but if I talk to my friends or family about the type of lending and market that we're involved in, and lending to people into their later years, it's not the norm. Okay, it's for many people in the market, until they have the conversation, until they really get into the nitty-gritty with an advisor who knows that part of the space, they're actually quite surprised on what can be accessed as they move into retirement years. Yeah, I think that's part of the challenge, guys. I think, you know, if we're not helping people understand what's available to them, they don't know what you know what they can do to, you know, I suppose broaden their horizons or make their dreams and their intentions happen as they move into the later life space. So for me, that's the first challenge, but it's a challenge that we can definitely, you know, make a difference with, make our mark with. I think all brokers, and I'm sure everyone who's on this session today, great turnout by the way on this, being a half term across the country, but I think it's really important that people broaden their horizons and look at what's available. And if you're a broker in today's market, you need to have this part of the market as part of your service offering. If you haven't got it, then in many ways, you you know, it's a big gap in your portfolio, and it's a missed opportunity, because there will be more and more and more inquiries and customers who will need your support within this space. So big one for me is education, which is part of what we do on a day-to-day basis. I think removing stigmas, that comes as part of the education piece anyway. You know, a lot of people maybe look at the retirement market as something that, you know, it may be a bit of a negative, don't really understand it and draw their own conclusions from that, and possibly the wrong conclusions, that, you know, there are people who are maybe going into retirement with reduced pensions. Pensions aren't what they used to be, or other incomes going into retirement, and they've just accepted that as taking the hit when they're sat on a unencumbered property worth £500,000. You know, it's ludicrous, really, if you really think about it, the logic around it. You can actually access that, be it paying, you know, monthly payments for that, or if you haven't got the income and you need to access the equity release market as well. Those products are there for a reason. It's to give people the opportunity to fulfill their lives as they move into later life, and being sat there on a property worth that and not utilizing that to, you know, really make the most of their later years really seems bonkers to me.
Yeah, no, absolutely agreed. I mean, for me as well, what I find, and speaking to brokers regularly, is you've got your equity release brokers and you've got your resi brokers, and a lot feel that they can't do it due to permissions, or, you know, and that's where it comes back to finding that referral partner. And maybe they want to delve into it at the later date, which is perfect, so they can give a whole holistic overview on it. But for me, it is absolutely imperative that, you know, they do find a reliable referral partner who they can refer the other side of the coin up to.
Yeah, definitely. So Jay, you mentioned about the education side of it. Like I said in the presentation, I agree with you. The education side is massive, because people still don't understand what the late life sector is. Is there anything else the guys on the call today could be doing, or anything we could potentially doing more, do you think, around that side of it, or they can do to actually get that the education or the understanding of the market?
I think first of all, you need to bring yourself up to speed with what's available. I think the market's moving really quickly. I think, you know, lenders obviously have got to play their part, in the sense that we've got to keep innovating, moving this market forward and normalizing this sector, because, you know, as you guys have already said in this is another area of specialism within the mortgage market. It's not, I think we've been probably guilty of in the past of saying later life lending and sort of isolating that as a separate entity within the market. For me, it's just another specialist area, maybe like buy-to-let lending, maybe like, you know, adverse lending, that side of things. You know, it's residential lending for a different age range, or a different demographic within the space. So I think the more that you do that on a day-to-day basis as a broker, and sort of switch your thinking around it, the more then that will come across your customers, and you'll be able to you know, approach customers in that space and understand what their needs are. I think, you know, not really having a negative view of that will help that, but also then engaging with people who are probably dealing and helping people to navigate that time in their life, either early in their planning or later on, is really important as well. So if you're speaking to someone like a financial advisor and they're going through, I mean, I've done it myself, I'm in my mid-40s, talking about your retirement planning now, so that I've got an idea of what's coming down the line, thinking about maybe inheritance tax planning with some customers as well. There's a whole host of areas within the market that work in tandem with then being able to access those funds for the right reasons, and being able to plan in the right way, so that you've got a financially sound plan, with a professional, and being able to link in with that will open up new doors for you. In the same sense, you've got accountants, solicitors, the usual suspects, which I'm sure many of the brokers on the call, on the webinar today, are already engaging with, but maybe not thinking about that part of the market within that conversation. I think, definitely. You know, there's a lot of elements to people's life and how, as professionals, we need to be able to interact to make sure that all those choices available to them. Once they've got that, that's where they will get, ideally the right result for them, because you'll be able to give them all those options, and they can make that informed choice then based on your advice of what works best for them. And I think that is the easiest way forward. Obviously advertise and the fact, and just making sure that people, I think it's a slow burner. We've been gradually working this into the market at Hodge for many years, and I would say we're probably at a stronger point than ever in brokers understanding what can be offered through the different products that we offer and other lenders offer within the market. But there's still a huge journey to go on, and if you're focusing on this area as another part of your business, I have no doubt that will add value and help you grow your business now as you go forward, in the next years to come.
Yeah, I mean, for yourself and for the brokers out there, I mean, what would you class as a good customer outcome for these type of borrowers? So how does the later life lending support financial decisions?
Well, for me, I think a good customer outcome is a customer who you've had a conversation with them, you understand, you've done a thorough fact find, you understand what their goals are, what their intentions are, and their situation is, and being able to, present them or open up those opportunities that are available to them across the board. So, it might be that you have a conversation with a customer, they don't have any income at all, but they have a huge amount of equity in their asset, and instinctively or immediately you can identify the fact that probably they're going to be looking at maybe a lifetime mortgage on that basis. But on the swing side to that, if they have plenty of income and they're in a position where it's affordable and they'd like to be able to manage that interest or even pay that mortgage off during that period, affordability based products are available to them. And let's not come away from the fact that is the largest share of the market, the affordability based products. You've got, I think last year it was as an industry the first time we reported the size or approximate size of the older retirement market is 154 billion pounds. So that's any mortgages that taken past that standard retirement age. 80% of that figure is affordability based products. So I think good customer outcomes is clients understanding what's there, having a true view of the options available to them, and being able then with your guidance to make the choice that suits them best. And that is not a revelation in me commenting on that. That's what we've done for years and years, regardless of where the client sits within the market. That's what has to happen through the advice process.
Absolutely. I know before Stu goes on to the final question, I just want to say I think there's a common theme I'm getting, and I don't know if everybody else is, but it goes back to a holistic approach, a holistic overview, giving that holistic advice, both sides.
Yeah,
absolutely.
Yeah, I think we've kind of covered the last question off already, to be honest. So I think for the guys on the call now, the main takeaway point, this is just the education part of it. It's tapping, and it's not, ideally tap into us at Hodge for that type of it, but there are many different lenders out there who in this space do different things to us. If everyone did the same thing, it'd be boring. But it's just tap in and use the BDMs, the national account managers, the collab events we're running now with Standard Life. Who else is on the collab with us?
Standard Life, Live More, Family Building Society, ourselves.
It's just tap into them guys, and if this is a market.
Or LNG, sorry, and LNG. Right. And a bit of brain fog.
If it is just a market that you're not regulars in, or I've never written this type of business before, just need that more education. Just use us. That's what we're there for. Use it. We want to help you guys to grow your business, to earn more money. Let's be perfectly honest. That's what you guys are in this for, and that's what we are there for, is to help and support you guys for that. I
think you're absolutely right, Stu. And I think the other thing is something we pride ourselves on at Hodge, and I know you guys and the rest of the team always look to do this, is we'll try and help and say yes on every case and find a solution for you based on obviously the different propositions that we offer. If we can't, we will always, based on our knowledge of the market, try and point you in the right direction. I think it's really important that from a sales and a BDM point of view and support point of view, you're getting that from us. But it's something that, you know, we will always challenge ourselves on making sure that you get that. So it's not necessarily going to be the business that crosses your desk on a day-to-day basis unless you're focusing on this. This might be one case a month. It might be one case a quarter. So when that comes round, if you need that reassurance and that support and that help through the affordability calculator and just helping being able to navigate this market as you learn, then that's what we're here for and that's what we'll support you with. However, the more you do it, like anything, the more you get used to it and less you'll need support with.
Excellent. So I think that takes us to our time, unless anybody's got any other questions.
Just answering a quick one in the chat now.
Okay. That's great. And if there's any other questions, guys, then you know, there'll be something that pops in your head afterwards, I'm sure. Then just pick up the phone or drop us an email, and you know, we'll be more than happy to support you now going forward.
Yeah, just want to say a big thank you for jumping on, guys, and also to our marketing department, Lewis, Michelle, who are on the call today, for setting this up for us. For all you guys taking time off from your half term and putting the kids in front of the TV and grabbing a piece of toast and a cup of tea and listening us go on for the last 4 or 5 minutes. Anything you need from me, Hema, James, and the team, just feel free to give us a shout.
Thank you all.
Thank you, guys.
Thanks, everyone. Take care now.
See you later. Bye-bye.